Hello, I'm Tim Curran, half of the finance couple, and welcome to 2 Minute Tuesdays with Tim, where we look to blend financial planning with a little bit of common sense, which unfortunately, as we all know, is a little bit too uncommon these days. Today, we're going to talk about some tax tips, a couple that everybody needs to know and a couple that might apply to the older generation. The first that apply to everyone. First off, federal government has extended the tax deadline to May 17th this year. So not only do you have an extra month to get in your paperwork, but you've got an extra month if you owe money to the government to get them a check. You got to get that check in the mail by May 17th. Depending on what state you live in, that state may have extended to May 17th as well, but you need to check. Make sure, because some states are still sticking to April 15th, so be very careful about that. Now, we talked about sending in a check versus maybe if you get a refund. There's a lot of people that tell us how excited they get to get a refund every year from the IRS. Well, guess what? I don't think it makes any sense. You shouldn't get excited if you're getting a refund from the government, because it just means that you loaned them money at 0% interest for X number of months. It's not that good a deal. Quite frankly, I'd prefer to always pay the government a check on April 15th or May 17th if it's this year, rather than getting a refund. Make sure you pay enough along the way through withholding, tax estimates, or what have you, so you don't have any interest and penalties. But getting a refund check's not all it's cracked up to be. Okay, so here are the two other tips for an older generation. People over 70 and a half previously had to take what's called a mandatory distribution from the IRA, essentially so the government could tax you on that distribution. The law has changed. It's now moved it to age 72. But what we're going to talk about is 2020. For 2020, because of the pandemic, the government came out and said, not only do you not have to take a mandatory distribution, but you can replace any of the money that you took out of the IRA. So if you did put money back into the IRA, you need to make sure you notate that either on your tax forms or with your tax professional. If you don't, you're going to be paying tax on money that you don't necessarily need to pay tax on. The last tip is what has to do is what's called a qualified charitable distribution, a QCD. A lot of people, again, over 70 and a half are able to distribute money directly from their IRA to a qualified 501c3 charity. And if you do so, the money essentially comes out of the IRA tax-free. But here's the kicker. If you don't notate it on your tax form, you got to bring this up with your tax professional. Tell them what part of your distribution was a QCD. If you don't do that, again, you're going to be paying tax on money that you don't necessarily need to pay tax on. So those are the tax tips for today. Next week, we're going to get a little bit morbid, and as the title to the next week's discussion will be, are you prepared to die? The only two things certain in this world are death and taxes. We just covered taxes. Next week we're going to talk about estate planning. Are you prepared for the inevitable? It'll be morbid, but it won't be morbid. Look, everybody's going to pass away, so we just need to be prepared for the inevitable. Make sure you've got those estate planning documents ready to go. Thank you so much for joining us. Please share this video, like us on Facebook, send in questions to us. We love to hear from you. And again, thanks for joining us. And as I always like to say, mind your state of mind. Take care.